Hey all, Tom Weller here from forexreviews.info. I got a common question I want to get answered today, and that is what to look for in a Forex broker. What to look for if you're looking for a good Forex broker. There are so many brokers out there at the moment, is there not? You've got like ECNs, you've got option, brokers. We've pretty much got a different broker for every sector of the market, right? However, as a Forex trader, there are only certain types of brokers you should be looking for. You want to be looking for a broker that is more like a business partner, a broker that does not want to intercept with your own money. So let me go through the list of what the sort of attributes that I look for in a broker. Okay? Now, the first one being is you want to be looking for a broker that is fully regulated. Okay, you want to see that regulation, that it's been regulated properly, and so you know that there is someone looking over that broker, making sure that nothing's being manipulated. Okay, so that's number one. The second attribute you want to be looking for is a broker that has straight-through processing. Now, there are two different types of straight-through processing. There's one type which is actually literally straight through to the market, like interbank. That's the good one. And there's another type of cheeky form of straight-through processing, which is just straight to the dealing desk. It's almost like really not really straight-through processing. It's almost like straight through to the dealing desk, and you got to be cautious of that. So you really want to be checking with your broker, do they offer straight-through processing? Okay, now what this means, and you're probably wondering what exactly this means. What this means is when you execute a trade, they will give you the best liquidity provider. Now, most good brokers offer a number of different liquidity providers which give you a sort of spread that's sort of moving up and down in your MT4 or whatever platform you're using. And it's moving up and down for the reason that it's trying to give you the best price possible. And so when you click that, the broker tries to match the perfect price. Well, the application tries to match the perfect price instantly, right? And the computer program just takes that price from the liquidity provider that gives the best price straight directly to the market. That's the type of broker you want. Okay, the broker in that sort of circumstance, the broker only makes money from your spread. Okay, and so they have no incentive to trade against you. They're not market making. They're not, when you open a position, they have to open an opposing position. No, you don't want that. You want where you execute a trade and it just goes straight into the market with the liquidity providers, themselves, and that's what's going to give you really quick, execution times. Now, if you're with a broker and you click open trade and it's literally taking more than 5 or 6 seconds to open a trade, you've got to ask yourself what's going on here, because it literally should be seconds. Okay. Literally, well, not even seconds, literally less than a second, right? As soon as you click that button, it should be dunk on your chart, okay? Okay, so that's an example of straight-through processing, right? And that's one thing. That's the second thing I want to go over in this, what to look for in a good broker. The third aspect to look for, and some traders seem to think it's okay, is a no dealing desk. You want a no dealing desk broker. You don't want any of your trades filtered, right? Now, what I mean by dealing desk. Now, a lot of people don't understand what the concept of a dealing desk is. I'm just going to sum it up for you. And some of the negative things, there is a couple of aspects which are positive. To be honest, I think the negative aspects far outweigh the positive aspects. So I'm not going to even go into the positive aspects at all. I'm just going to go into the negative side of it because I believe that a no dealing desk is much better, right? Okay, no dealing desk. I'll tell you why a dealing desk can be bad. Well, a dealing desk is what is scanning your entries pretty much all the time. A dealing desk can look for certain situations where, it can see where people are placing their stops and stuff like that. They're actually looking at the market. They can actually see, whether they want to give you that offer. A dealing desk can be the sort of broker that says, "Oh no, we don't like traders that scalp the market." Look, this is the thing. If a broker doesn't allow you to scalp, they're not a real broker. This is your money, and you should be able to do whatever you want with your money, no matter what it is. Whether you're buying, as an example, if you bought the euro at 130, you should be able to close it at 130.05, making half a pip if you like. There is no rules against scalping. And if brokers try to say that there's rules and regulations against that, they are fibbing to you and they're tricking you, right? Scalping is not against the law. It is not forbidden. It's completely allowed, all right? Unless, of course, your country has some special rule against scalping, and then that's your country's regulation. That's completely different. But this is your, when it's your money, it should be treated like a bank account. And that's where I go into number 4, right? Which is how your money is held. All right, you want to contact your broker and make sure that none of your equity, right, is used for anything else other than, none of your money is used for anything for using as equity. See, this really applies to if the broker you're using is a market maker. Then literally they can use some of your funds to trade against you or trade against another trader. And that's what you want to be careful of. Is none of your equity is used for anything else. Now, what this means as well is that you should be able to withdraw money as soon as you want it. Like, meaning as in, like, of course, bank times, which is 2 days, okay, 2 or 3 days, and there should be no delay in accessing your money. Meaning that if you deposited $1,000 and just said the next day or the day after, just went, this is not working for me, I want to take the money out, you can take the money out. And this is something that you have to emphasize with the broker that you're with, and ask them straight away, look, if I want to take money out any time, can I take money out? Right? And you really want to ask them specifically if that's the case. And if it's a straight through processor type broker or a no dealing test broker, they usually have no problems whatsoever. Okay, but this is something that you want to confirm when you're looking at a broker and trying to find a good broker for you. You've got to see them like a business partner, right? Okay, so the other aspect of that is, number 5 is you want to be looking for a broker that has no fees on depositing or withdrawals. Okay, now if they have fees on depositing and withdrawals, other than, of course, bank fees, if you is cross-country, of course, the broker should be allowed to charge cross-country fees because it's costing them money for you to withdraw the money. That makes sense. But you don't want to be looking at a broker that profits from withdrawals or deposits. I just think that's wrong. That's my own personal preference. I see brokers like a bank account. Okay? And when I talk to my brokers about this, all the brokers that I've been involved in, like one of the brokers I'm with at the moment, if you want to know about them, is Go Markets OS. You can check them out. And you want to see them like a bank account, right? And so when you want to access your money, could be 1 week, next week, whatever, it's your money, right? Okay, so that gets on to the final point of the last thing to look for in a good broker. There's another 2 different types of brokers. There's brokers that offer really low spreads, and there's brokers also that will charge a commission per trade as well. This is really your decision, because if you ask me, I prefer just a hard spread, right? I'd much prefer to pay a 1.2 pip spread, which is the average spread I pay on most of the brokers I use, or 1.3 pip spread, most of the brokers I use, than actually having like a $5 commission or a $3 commission every $100,000 traded, right? Because when you work it out on a calculator, it works out that you're paying the same as a spread anyway. So it just seems like a little bit of a marketing tactic that a lot of brokers are using. And so this doesn't appeal to me. However, if you find a broker that you feel like that it's a better deal, like as an example, Hot Forex offers a really, really tight spread. And this is one of my recommended brokers as well that I think is pretty good. They offer a really, really tight spread. It's also a broker that I use as well. They offer a really, really tight spread on their CurrentX account. And the spread is so tight, but they do offer it. They do charge a commission per 100,000, right? And it does work out a little bit less than most other, brokers. But to me, it's really much the same. It's not much different. However, I'd much prefer to have a broker, and the good thing about brokers like Hot Forex or the other broker I'm using like Go Markets and stuff like that is they allow you to get the money out easy, okay, and it's not a big deal. They're not dealing desk brokers, so this is one thing you want to be looking at. So let me just go over this list really quickly once again. Like I said, this is a common question at my site, so I want to really summarize this so you get a bit of an idea of it. Look at the broker you've got right now. Ask yourself this: is there a dealing desk? Right? You can write this down and sort of you can check this off with your broker after you watch this video. Are they a straight through processing broker? Yeah? Are they going straight through to the liquidity providers, meaning giving you the best execution in the market? Right? A lot of brokers offer it, so if they say no, well then say why not? And you might want to consider changing brokers. That's my own personal opinion. I would do it. Seriously. The third one is, are deposits and withdrawals pretty much instant? Well, not instant, but are they, by bank standards? You're not waiting 10 days for a withdrawal, etc., like that. And on another note, are they using your money for funding if they are a market maker? And this is only a clause question. If they are a market maker, are they using your money for funding opposing positions with other traders? Right? So overall, that's a little bit of a background. That's a little bit of something that you can look into to find a good broker. The three ones that you really want to look at. Oh, the two ones that you really want to look at in emphasis though are they a dealing desk broker and are they a straight through processing broker? Okay. Of course, you want to know, are they regulated? So it's really three. That is really the three: regulation, straight through processing, and no dealing desk. Okay, well, I hope that answers that question properly. If you have any more questions like this, just feel free to let me know, and I'll try and answer them as best as possible. Okay, well, thanks for watching, guys, and have a great rest of the day. Bye for now.